This is our Forex blog for December 3rd, 2012. The first step of our easy three-step Forex trading system is to use our currency meter to identify which currencies are strong, which ones are weak, and then just simply buy the strong versus the weak and sell the weak versus the strong. Most people trade either the dollar or the yen. Now our statistical tools use multiple different time frames, different statistical models. Some of them measure just the percentage going up or down based on that statistical model. Other ones measure the intensity of that trend. And so basically, if 80 to 100% of pound pairs are going up like they did today, and they did so with incredible intensity, you're going to see green, and you're going to see lots of histogram values at and above the dotted 80 line. That's what we consider extreme strength. You just want to buy that versus one that's very weak, like the dollar. Now, to keep it simple, the new currency meter, build your own trend, which you can set any weights for each of the individual tools and the settings for each of the individual tools. So the weights and everything is pretty much adjustable by you. This one also has the daily trend, weekly trend, and monthly trend in there. And 2/3 of this reading is real-time, very fast momentum, and about a third of it is the daily and weekly make up the most of it, and very, very tiny amount is the monthly trend. So anytime you see extreme strength like this, pretty much all the time frames are going up, and you want to trade that against the weakest one, which is the dollar. So we're looking to buy the pound dollar today. Here's the individual chart, and there's a couple things to notice when you first look at the chart. First, especially earlier in the week, what is the most actively traded price during the previous day and also Fridays? The yellow point of control, this is market profile technology. This is where most traders had positions during the previous day, and the upper and lower value area is right here, and the lower value area is right here. This is where it spent 68% of its trading activity on Friday. And breakouts from below to above Friday's value area high is very key. So it broke out right here. That's a pretty good trade. Came down and found support. Wasn't able to come back underneath it. We're above previous day's high, and then it took off again. You're looking to buy pullbacks, and you can see it just kept going up. And our tools showed you it was going to keep going up. This is what the old currency meter looked like. A histogram format where I did not include any of the daily, weekly, or monthly trend. The bottom three show you the daily trends up, the weekly trends up, the monthly trends up. Much easier to read just one histogram value. And anytime you see an explosive move up with incredible momentum, and then you get a pullback with less weakness than you had strength, that's a trend that's very likely to go up. And typically at and above our upper containment bands, you can start to look for counter trend trades. In fact, I scaled into a pound dollar trade myself. My average entry price was 61.11. It went a little bit beyond my last entry, and I got out of this somewhere around 6100 because it really took a long time to come down. You can see 11:30. It was a little over an hour before it just slowly inched its way down, and I wanted to go get something to eat, so I exited the trade with a small approximately 11 pip profit. One of the better tools in our software that let you know when it's quote unquote safe to do counter trend trades is our range projection. And anytime a currency hits it goes above the daily statistical high, it becomes a relatively high probability place to scale into a big position and expect a counter trend trade. If you put 1440 minutes on here, this shows you the daily statistical high and low. And this is the daily high right here. This is a 1 standard deviation high. Probably about 80–85% of the time it doesn't go much above that before it starts to reverse. And this is a good place to have your last scale in price at and above this level. I set alerts also last night, or actually earlier this morning, off of the previous swing here. Oops, drew that on there wrong. And so at this area right here, if you right click and you go to our drawing tools and put a little line on there, you can go to create an alert and have a cell phone message sent to your phone. So you don't have to watch the markets tick by tick throughout the day. You can, even if you have a regular job, be notified on your cell phone, put a trade on, and if it's a very strong one like today, the pound dollar was one of the strongest ones, you don't want to scale in at the 1.382 fib. You might want to go closer to the 1.618 like I did. And so I got into a pretty big position, only made about 10 or 11 pips on it. You know, I got out too soon. Obviously, it's down another 6-7 pips from where I got out. But the point is, these are very high probability places to get into trades. Most of the time, it doesn't go above the 1.618, so I was a little shocked that it went a few pips up here, and that's why I always scale in light, get into a small position at first, and then progressively bigger and bigger. So usually, if it goes 5 or 6 pips my way, I'm at break even very quick. There was a trade I took last week where I got scaled into it and made 25 pips on it because it fell real fast. There's, you know, the uptrend was over and it just collapsed. You know, most of the time when you do counter trend trades, you're going to get 10-15 pips counter trend profit max, unless you're willing to hold for hours and hours, which I typically am not. Another thing that you can do to help your trading is using trend lines to help spot. Let's just go to a 30-minute chart here. Control L or Control R brings up the ray. If you have a trend line up like this, and I'm going to readjust the bottom part. If you right click on that, duplicate it, and then project that from the highs, you know, it's specifically the more places that get touched, the better. Here it kind of was slightly underneath those highs, but it tagged this high here. This is another excellent place to start looking for counter trend trades, and that's another reason why I, you know, really started to get into my trade right around 6,100. That was actually a cell phone message coming to my phone in another market that I trade, and alerting me that the place I felt was a pretty high probability place to enter a trade was hit, and therefore, you know, it's time to buy in this particular case. And that's what makes trading a lot easier. When you're not watching every single tick up or down of the market, you can be a lot more patient and catch those high probability trades, so that when you do get an alert, you can put the trades on and then put your target or your next scale in price. And if you choose to do that, I would practice on a demo account before you do that with real money. And then it's a great way of you know, having the discipline of waiting for the price to hit your you know, quote unquote safe buy and sell level. So let's go and look at some of the other trades you would have found today. Using the currency meter, the euro was also strong, so it makes sense to look for euro-dollar buys. Also noting on the chart here, we have the point of control of the previous day. It's above last week's value area high, which means, you know, this is a very strong market. And notice how the value area access support. Anytime you see this area access support, especially the second time it's not able to go through it, momentum to the upside, not that much weakness on the downside, pretty safe place to buy. And again here, notice the two big moves. Typically when the market makes a big move, and also notice this gray area here, I do Fibonacci analysis for my own trading. These are pretty much where I set buy and sell level alerts, usually a few pips below that. These are areas where it becomes a relatively safe place to exit your trend trades and look for a counter trend trade. If these areas happen to be at and above the 2.0 white band, you can usually scale into these trades relatively safely. Notice the euro-dollar went right to its daily statistical high, couldn't go a pip, you know, went a few pips above it. Anytime the daily statistical high is right near a Fibonacci analysis area or upper containment bands, it adds to the probability. So not only can you do a counter trend trade or exit your trend trade, but you can do a counter trend trade, and as you can see in this case, fell from 70 all the way down to 40. It's 30 pips. Typically when a market falls with a lot of weakness, goes up, it's kind of going sideways, it's right at a major support area, the previous day's high. When it breaks out, this is a pretty high probability place to go long. And you can see our displaced moving average makes a good exit method. Also the counter trend signals make a good place to get out as well. Now the dollar wasn't the #1 weakest currency all day. The CAD during most of the U.S. session was much weaker. So, probably an even better one than buying the pound, dollar, or euro dollar was to focus on buying the euro CAD and pound CAD. So I'm just going to bring this up and showcase it here. Notice how this one also stopped right at the 1.0 range projection area. This is a great place to get into little counter trend trades. Notice if you got short here at 93, pulled all the way back to 70, that's 23 pips. Let's take a look at the pound CAD, which probably went above its 1 standard deviation. No, it didn't quite make it there. But also, just notice the pure clean trend up here. Let's go to a 5-minute chart just because I don't keep these set for longer time frame ones. Alright, this was kind of going sideways. This is where the trend really began. You have a trend line over the highs here. You have a nice pullback right here. And typically, once you have anytime you see a multi-hour rectangle pattern with a very tight range, when it breaks out of this range, it usually starts a trend. And typically, once it starts moving, if you draw your fibs on that first decent sized move, in this case it's 66 pips, most of the time it's not likely to go much above the 1.618. So it's a perfect profit target in that case. And if it went sideways long enough and breaks down from here, you can go short. And then the next area up is where I would start to scale into a big counter trend trade. If you want to see what that price level is, you can just simply, to the max price here, put let's say 20%, and it will add 20% padding. And that way you can see where it is. It's right up here at 6036. And what you can do is put a line on there, right click, create an alert, have it sent to your cell phone. And when it gets there, you don't have to watch it, whether it happens in 20 minutes or 7 or 8 hours. You don't need to be glued to your computer looking and waiting and wondering why it's taking so darn long to hit your target. That's the beautiful part about using both our trend line alerts that get sent to your cell phone and also price alerts. You don't have to be a slave to your computer watching it every second of the day. You can go about your life, and when you see these levels get hit, a lot of companies have cell phones applications where you can enter your trades on your phone or adjust stops, targets, and so forth.